no end to the shadow boxing between the government on one hand and the Reserve Bank of India on the other. Just days after RBI Deputy Governor Acharya launched a tirade against the Modi government for coming in the way of central bank's functioning and autonomy, the RBI Employees Association today came out in support of his call for greater autonomy. But a settlement seems a long way off, with both sides sticking to their guns. It is not the first time that the RBI and the government have crossed swords on policy matters. At the heart of the debate is the apex bank's refusal to give growth a chance at the risk of a spike in inflation. Besides, of course, many other issues like PSU bank control, payments regulator and reserves. Mint Street's mandarins are also not happy with the government's plan to chip away RBI's autonomy by creating a separate regulator for payments bank. Like I just told you, liquidity concerns have also come to fore, and so has prompt corrective action. The worsening of relationship between New Delhi and Mint Street is a topic of discussion and debate right here on the India Development Debate this evening, and I'm joined by V. Anant Nageshwaran, Dean IFMR Business School, Kriya University, Sadanand Dhume, Resident Fellow, American Enterprise Institute, Samir Ghosh, General Secretary of the RBI, and of course Maithili Busnoor Mata, Consulting Editor right here on ET Now. So thank you each one of you for being with us. And Maithili, you've been a central banker, so it's only fair that I start off with you. Is this just another point of friction in the government versus the central bank relationship? There have been disagreements in the past, and very vocal ones too, or has the envelope been pushed at this stage?
I would think it has been pushed to a level which was not perhaps in the best interest either of the country or the central bank itself, for the simple reason that given the nature of the central bank's job and the government, elected governments particularly, which do have a shorter time frame, there is something known as time inconsistency, so frictions are not new. But what is new is the manner in which the Deputy Governor has chosen to take this public and the language that he has used, which is almost a veiled threat to the government that if you kind of push the envelope so far, then maybe dire consequences would follow. As I said earlier in the piece that I had written for ET also this morning, that the previous former RBI Governor, Y.B. Reddy, who was well respected and in fact has been held responsible for having saved India from the the East Asian crisis, global financial crisis and all kinds of earlier crises that we've passed through periodically, he had gone on record to say that the RBI is not created by the government, not by the constitution. The created can never be independent of the creator. He'd also said there's no such thing as blanket independence. RBI is independent in terms of operational independence, but within the confines laid down by the government. So I think differences are good, differences are healthy, but they should not be taken to the public arena on technical subjects in particular, Supriya.
Okay, just give me a minute right now, because I want to turn the focus to what we are picking up from sources, and I know that's a very, very abused word, but we've been speaking to people both at the RBI and in the government, and Anant, I want to come to you because there seems to be this impression that's given that the tension has actually simmered not between the government and the RBI so much so as between the board of the RBI with all these newly put in members, corporates, N. Chandrasekharan and Dilip Shangvi and S. Gurumurthy, and the showdown seems to be between the RBI board, the permanent directors versus the permanent directors, and the issue really is to increase liquidity. A section of the recently appointed non-official directors do believe that there is not enough liquidity in the system, and I'm going to discuss PC and all of that just next. Will you give them the benefit of doubt that this is actually a war that we are seeing between the board itself? Anant?
Yeah, I'm not sure that it is the board that the RBI Deputy Governor was targeting. If that is the case, and I also had a chance to interact with at least one of them in recent days, at least from my interaction, I didn't get the sense that they don't understand RBI's point of view. So I do believe, and again, I'm not saying that I have any special knowledge here, but I do believe that it is more of a battle with the government and not so much with the government nominees on the RBI board. And I very much, I'm very happy to find myself on the same side of the wicket as Maithili is.
Okay, so it's not so much here that the fight really is between the government on one hand and the RBI on the other. I will take a quick question of Mr. Ghosh before I go to Sadanand. And Mr. Ghosh, in some ways you are espousing what the RBI is saying, but is this also a sign of this new communication strategy, we've seen, we've seen communication happen through speeches now.
No.
The governor spoke about supervision of banks. He spoke publicly. 1 second, sir. Then it was spoken about PCA. That was a public speech. Then, of course, February 12th circular, there was a public speech, and now this. Is this the new modus operandi of communication? Because the tension between many people believe the central bank on one hand and the RBI is not new. The government has held back, it seems, and the RBI has let loose to a public showdown.
No, in fact, what I feel, and our association also feels, that the government of the country and the central bank of the country are having a debate, I mean almost in public view and focus, is not proper for the economy and image and what should I say, I mean the standing of both in the national point of view and the international community. So, actually there should be a dialogue between the two as to what are the issues and how it can be resolved. Unfortunately, what Dr. Viral Acharya has been constrained to say, I mean in very many sharp words, he has been constrained because of the I think, I mean continuous nibbling by the government for quite some time on very many issues, right from the independence and autonomy of the central bank of the country, as well as the regulatory role of RBI on payment and settlement system, on the RBI balance sheet, and the government's, I mean, what should I say, government trying to raid it. I mean, raid is the word used by Dr. Rakesh Mohan, you must be knowing, the former Deputy Governor of Reserve Bank of India. In a very recent article he has written in some newspaper, he has said that RBI balance sheet is being raided. So, naturally all these issues, very many important ones, have, I mean, brought all these things,
right.
Or rather constrained Reserve Bank of India to bring all these things
Samir,
to public focus, because internally these things could not be resolved.
Right.
Yes.
Okay, Samir Ghosh, give me a minute. I will go across to Sadanand. Give me a minute. I will go across to Sadanand and come back to you for another point of view. And Sadanand, I am just being the devil's advocate. At a time when there is a global crisis and that threatens your external trade environment in any case, the trade tensions and the currency crisis that we are seeing, should RBI have added fuel to fire? Because many will see this as a sign of manufacturing a crisis where none exists. The job of the central bank is really to calm markets and not to trigger a crisis. Many people are seeing this as a public restraint that should have been, exercised, and it wasn't. RBI or central banks around the world are supposed to be harbingers of, in many ways, calm and some kind of sanity.
No, I mean, that's certainly one way of looking at it. It's not the way I see it. I mean, I see it in exactly the opposite way. Why has the Deputy Governor of the RBI been forced to basically speak so strongly? To me, it signals exactly the opposite. It signals that the government has pushed the bank, which is by nature a very conservative institution. This governor certainly has not had the habit of, sounding off on all kinds of issues, which I feel was one sort of legitimate criticism of his predecessor. So the fact that the bank feels that it is being pushed into a corner both by potential government policies and also by some of the government's irresponsible appointments on the board, to me suggests that the problem lies not with the bank, but the problem lies with how the government has handled the bank.
Oh, I think that's a very different view, and I think that's a pertinent view as well. They've been pushed to an extent that they are willing to talk the way they are. But let's just get down to specific issues, because I have many of those other issues to ask. Is he shooting from the deputy governor's shoulder, and is Argentina the right comparison? That has been done. I will come back to that, and let's talk about specific issues. And Maithili, I know in your column you defend, you have criticized the RBI for speaking in a language that they should not. But the counter argument to that is, and I'm going to get down to specific issues. Let's talk about supervision of banks. RBI is crying foul over control over PSU banks. Is that a legitimate concern or not? Because I know you believe that the private sector banks are as badly placed, but the reality also is that when the banking crisis started breaking out in India, when the PNB scam broke out, the needle of suspicion and the needle of blame quite conveniently shifted to the RBI. Everybody was talking about regulatory oversight and regulatory failure. The reality was, it was the government of the day, of the previous day, that was equally responsible for this crisis. So as RBI, I'm talking about specific issues. As far as supervision of banks is concerned, doesn't the RBI have a legitimate grouse?
Supriya, PNB case is a wrong comparison because PNB was an outright fraud. Now, in the case of fraud, yes, you cannot hold the RBI responsible. It is the bank that is more responsible, certainly. But in the case of banks in general, public sector banks in general, the sharp increase in NPAs is despite the fact that the Reserve Bank of India has a representative on each and every board of the public sector banks. The RBI is supposed to, until not very long ago, it was doing a detailed financial inspection. It stopped doing that some time ago, as a result of which it was not aware of the steady deterioration in the bank's assets. Overnight, under the AQR, suddenly under Raghuram Rajan, the bank decided that many of the accounts that till earlier were kosher, suddenly were not. So the RBI is squarely responsible for the state of affairs. Remember, the weak monetary policy, the loose monetary policy under the previous, under Dr. Subba Rao and Mr. Chidambaram's time was also responsible for encouraging banks to lend wildly. In fact, Mr. Chidambaram constantly used to exhort the banks to keep lending, and to some extent it did keep the economy afloat. So it's a combination of factors, and as you've seen in the case of the NBFCs, where RBI cannot really shift the blame. RBI has been found wanting as far as supervision and inspection is concerned. And as far as Mr. Sadanand Dubey's point is that RBI is actually spoken out, was compelled to. I would just like to refer him to a small quote of Mark Carney, the present governor of the Bank of England. He said it's very important not to confuse independence with what he says, independence with omnipotence. And this is where the RBI is falling short. It considers itself omnipotent, whereas what you need to do is have dialogue with the government behind closed doors on matters that the general public really does not understand. And one more quick point to Mr. Sameer Ghosh's thing about the balance sheet of the RBI, the charge that Rakesh Mohan has been about raiding. I can understand Mr. Ghosh's concern because the RBI transfers the surplus after meeting its expenditure on staff, which is quite generous.
No, Maithili,
so
give me a minute.
Any reduction in
Maithili,
the amount that is transferred by reducing staff benefits would have a, yes, sure.
No.
Sure.
Maithili, give me a minute. I have a separate topic. I have a separate topic and a very specific question that I want to ask this panel, but I will go across to Sadanand, and Sadanand, Maithili is putting a direct question to you. This isn't just about independence, and independence should not be confused with omnipotence. And matters between the government and central bank, which normal people and, the Janata doesn't understand, doesn't need to be declared and, discussed in public glare. And just to give a little bit of a context here, while I agree with large parts of what you say, that maybe the central bank has been pushed to a corner, there is also a context and a time to do this. There is already a lot of uncertainty in the space, whether it's with external environment, whether it's with the currency markets, the CBI case, to add yet another angle and yet another, yet another war, to open yet another war front. Is that the right thing to do? Why did you come in?
Let me start by saying that, I have the highest regard for Maithili and her expertise on this set of issues, and I have no problem, agreeing with the general idea that a central bank must be independent and not omnipotent. But this, this becomes an argument about semantics. I don't think there's any evidence to suggest that the central bank, that the RBI under Urjit Patel is trying to be omnipotent. I think there is evidence to suggest that it is trying to guard its independence. And to go back to the sort of, the comparisons that come about, I think that many of the things that are being raised, like Rakesh Mohan's point about the reserves being raided, some of the concerns that have been raised about the nature of changes on the board and so on, these are genuine concerns. So it's not as though you have a government that is being, perfectly sober, and then you suddenly have these central bankers, getting whacked out of shape. I don't think that's the case. I think what we're seeing are genuine concerns about the erosion of independence, not any claim for omnipotence. And I think that those concerns are grounded in history. They're certainly grounded in a larger context in India, when we're looking at the erosion or the decay of other institutions. The RBI has in many ways been a standout institution that has done very well over the past several decades. And if the people who are at the helm now feel a kind of urgent need to protect that reputation, protect that autonomy, protect that sense of independence, I don't think that there's anything wrong with that.
Okay, Sadanand, give me a minute. I think it's very good to get these divergent and diverse views. It's always makes up for a lively discussion. But Anand, I want to come to you and let's open yet another war front in this debate, and that is about the reserves. You know, raiding of reserves, as Rakesh Mohan calls it, and Mr. Samir Ghosh is pointing out there. Maithili, of course, has a very different view on this. But let me get your view. I mean, is the RBI justified in making this whole case for a strong balance sheet? Are they justified? Because many people believe extra reserves that the government gets from RBI is not a deficit financing mechanism. It needs to perhaps be put to better use, and it should be held for a rainy day. The counter argument to that is that when the crisis unfolded in the United States and the quantitative easing happened, like Maithili writes earlier today, it was nothing but financing of the deficit in many ways. So, you know, is it raiding of the balance sheet, or is it reserves that the government legitimately wants the RBI to part with? Anand.
No, whether it is raiding of the balance sheet or whether the RBI is holding far too much of reserves, I think the problem is the optics when an India does it is different from when the United States of America does that. I read Maithili's piece and I agree with her conceptually, but I think United States is the issuer of the global reserve currency, and the Federal Reserve has always done exactly the opposite of what the IMF and the World Bank have advised emerging markets to do. So we cannot say that what the Federal Reserve could do or should do is the same as what the Reserve Bank of India and the Government of India could do. Having said that, I think it is, especially given these times when the bond yields are now stabilizing, if the RBI were to accede to the government's demand, even if the demand were reasonable, just as the speech was very badly timed, the transfer of such reserves to the government would also constitute bad timing. So actually, I have not major problems with Mr. Viral Acharya's comments and positions. I have really a problem with the kind of grandstanding that he did in public. So I think on reserves, at the moment, even if there is a conceptually sound case to transfer some of it to the government, I don't think this timing would be to the government's benefit. And if the government bond yield were to react sharply against that, it would very much undo the one-off fiscal benefits that the government hopes to get from this move.
Okay, that's a good point, and that's a point that's steeped in some context. But Mr. Ghosh, I want to come to you. And you know, you were particularly upset about this raiding of reserves, as Rakesh Mohan says, quotes, and of course he's been widely quoted in Viral Acharya's speech. Is it also time to build clear rules? How much? So let me finish my question. How much does the RBI need to keep as reserves? How much does it need to transfer to the government? There need to be clear rules that justify that, because a less confrontational approach is good for anybody. I mean, Anand is right in saying that, you know, even if there were to be a case to transfer reserves right now, it should not happen given the timing and the context of this, because bond yields are just about stabilizing. You don't want them to shoot through the roof once all over again. Mr. Ghosh, is there need for more clear rules?
One point must be stressed. Ma'am, one point must be stressed in this context, that about the independence of RBI. RBI is not independent in that sense that it is autocratic. RBI works under statute, Reserve Bank of India Act 1934. RBI works under certain mandates of the Parliament, and very many parliamentary committees RBI has to appear time and again, frequently, and there RBI has to explain its stand or explains its policies. So therefore, RBI is also being looked after and monitored by the Parliament of India. That is the highest body in our parliamentary democracy. So RBI's independence is not unfettered that way. And de jure, RBI is not independent, but functional independence of RBI, that is very, very important, as it has been established with the course of time and very many developments. Secondly, as you are saying, ma'am, about the RBI balance sheet. And I mean, the point that the government is now raising, that the balance sheet has got enough money, more than what RBI needs, so that excess money has to be parted with and given to government to look after its fiscal needs. Now, that is a very strange logic, Government must not depend on RBI balance sheet and RBI reserve to look after its fiscal needs, whatever. And they are saying that about 3.6 trillion rupees is there in excess in RBI's balance sheet. Point is that RBI's balance sheet means the strength, intrinsic strength of RBI and the banking system. And in our country, the banking system is very vulnerable. Now you know, madam, about 10 to 11 trillion rupees that is being considered as NPA, non-performing asset. And the way the banking system is functioning and the global system is also functioning, and Indian economy is integrated with the global economy. The way the forex system is going on, and rupee dollar and rupee and other forex
Mr. Ghosh, you'll have to keep your answers brief. I still have a lot of ground to cover, and I've got very little time on the show. Yeah, Samir Ghosh, just keep your answers brief so that I can cover a lot of points. But Maitli, I will come back to you for the next round, and I've just got about 6-7 odd minutes of the show. The question really is that as far as these two issues are concerned, these are debatable. But what about the payments regulator? Is the RBI justified in putting a dissent note? I know it is a draft proposal, but why have a proposal that is going to, that is going to cause some amount of nervousness in the central bank? I mean, payments should be monitored by the RBI. This isn't rocket science, is it? I know there are different models, but why experiment with those models when there is something crystal clear right in front of you?
Oh, well, absolutely, and on this I'm with the Reserve Bank of India, but at the moment it's only a proposal. The question is whether the Reserve Bank of India should have made that dissent note public, or whether it could have been discussed with the government and the matter sorted out. Because by taking it to the public, which has very little understanding of what a payment system is to begin with, I think it completely defeats the purpose. And as for the talk, if I can just revert to the earlier point of the reserve, the mention of 3.6 trillion reserves that both Mr. Samir Ghosh as well as Viral Acharya mentioned. Mind you, this is an unconfirmed quote from Cogenesis. Now, should the Deputy Governor of the Reserve Bank of India quote from an unconfirmed report to make a point? That is my question. Is this the way to do it? It is not so much what he has said, there will be differences, but this is not the way to do it. That was my main contention, is that, Supriya, because this unnecessarily creates a bigger issue, or what is always an issue, underlying simmering issue, which could have been resolved much more amicably with a little bit of a give and take. But ultimately, let us remember, it is the government which is answerable to the people. We are a democracy. Vox populi always must be superior.
Fair point. But Sadanand, I will come to you. And while I disagree with some parts of what you say, and I disagree with Maitli on some parts of what she says, but I think there is no disagreement on the fact that any of you will have on this panel that, it was a speech, all right, RBI was pushed to a corner, they had to talk back to the government. This is the communication channels are jammed, and so public speeches are the new modus operandi. But the question is, comparing India to Argentina, I mean, Argentina has defaulted on debt several times, external and domestic. India hasn't done that ever. His speech starts with an excerpt of a resignation of the Argentinian central banker. I mean, in that sense, while dissent is important, disagreement is important between the two, because they've both got different mandates. One is price stability, the other one is push growth, strictly speaking. But, which is why I say, has he pushed the envelope far too much?
Well, I mean, I think you can certainly make the argument that that particular point, starting the speech in that way, it's a little bit over the top or overheated, and that drawing a direct comparison between a country with Argentina's record and India is uncalled for. So that point is well taken. But I think, the larger issue, and this is something that, Maitli put her finger on, is this tension between this idea of elected officials eventually being responsible versus unelected technocrats. And nobody in their right minds thinks that the buck stops at the central bank and doesn't stop with the elected government. But at the same time, I think it's very important, and this is the central point of the speech as I read it, to find a way to institute checks and balances so that the elected politicians understand that it is in their interest to have a central bank that is widely seen as independent and autonomous. And I'm afraid that this government does not seem to have learnt this lesson. It has struggled over the past 2 years. We saw the tawdry way in which they eased out Raghuram Rajan. Then you had demonetization. The less said about that cockamamie idea, the better. And then you have, the RBI now slowly trying to kind of claw back credibility. And I think the government, if it were more long-sighted, would view this as something that is positive on the whole for India, as opposed to looking at everything in very, very sort of narrow confrontational terms.
Okay, Anant, I really have very little time on the show, but I will ask you this one large big picture thing. You've had disagreements. There will be dissent and odd dissent. There will be disagreements constantly, because that is what also makes a thriving, independent, autonomous central bank vis-a-vis a government that obviously has very different time frames as far as policy is concerned, and also very different objectives. Has India not been served well with economists as RBI governors, economists at the helm? Going back to the model where bureaucrats was sent to the RBI, it was done with the view that they'll be able to bring about some kind of a balance between Min Street and North Block. And that experiment did serve us well. Is the experiment of an economist at the top much to our own inconvenience, whether it's Raghuram Rajan or whether it's Governor Urjit Patel?
Obviously, going by the public nature of some of the disputes and this hearing, I think there is a case to be made, not so much as whether they should be economists or bureaucrats, or as to whether they should be diplomats or not. Maybe if economists have a fairly high degree of certitude about their views, then maybe it both go together. I would rather say that it is not economists as bureaucrats, but being diplomatic and more oriented towards problem solving than about grandstanding. I think also, let's quickly, independence should be more from the financial markets and not just from the government. And it was the previous government that introduced a second government director rather than the current government. So it is not necessarily true that this government hasn't figured out how to keep the RBI's independence intact and not encroach upon it. It is just that the other people were doing it far more elegantly, and this government might be doing it more clumsily. And in those occasions, the RBI establishment had not reacted this way. I think that is the key lesson to be learned here.
Okay, thank you very, very much. On that note, completely out of time here. There are very many key lessons. I wish actually I had, on hindsight, done this debate for an hour and not restricted it to 30 minutes, because there's just so much more to talk about. Maybe we'll talk later this week, very soon, as this squabble is not going to die down. I think this is the first that we are hearing, the first salvos that are being fired, both from the central bank and the government. But thank you very much, Anant Nageshwaran, Sadanand Dubey, Maithili Busnurmat, and Sameer Ghosh for being with us. The reality really rests in another position. The Deputy Governor perhaps was making a war cry for independence and autonomy. He was justified up until that point. But the fact that he held a veiled threat of market tantrums, market mayhem, currency weakening on account of a tug of war in macroeconomic management is when he perhaps pushed the envelope. The government of the day has to realize it will face an electorate every 5 years. It will perhaps make policies with a narrow and a short time frame to this. The RBI is the institute that has to protect the currency, it has to defend prices, and it has to manage forex reserves. It's best if the RBI is autonomous and independent. Disagreements, like we've been asserting here right here on ET Now, are welcome, they are healthy, but they need to be behind closed doors and not on television cameras.